Welcome to video 13 in the Money Education Financial Statement Preparation and Analysis Software Instructional Video Series. As a reminder, videos 1 through 6 in the series provided guidance on how to get started using the software and data entry to build the base case. And in videos 7 through 11, we covered how to make recommendations in the software. This video will cover the Calculator tabs and the Goals Report tab. When you first log into the software, the first page you come to is the Manage Cases page. You can choose to use an existing case or create a new case. I'm going to use the example solutions case that we've been working on and making recommendations. The Calculator tabs can be used in conjunction with making recommendations and in analyzing long-term goals. Let's start with the Social Security calculator. In the previous video, when looking at the long-term goal for retirement, we assumed the clients did not want to include Social Security. Let's say the example clients changed their minds and they do want to include Social Security in their retirement calculation, or that they had a shortfall and we needed to look at alternative goals, so we want to do a calculation that includes Social Security at age 62. On this tab, we can determine the amount of Social Security benefits they would receive, factoring in the reduction for starting benefits prior to full retirement age. The first thing we need to do is name the calculator, and I'm just going to name this one age 62. And we'll have some information to fill in, such as the age of the client, and both the client and the spouse were age 40 in this case. Both were born after 1954, so we can check the appropriate box there. And then we need to fill in the expected annual retirement benefit in today's dollars at 100%, meaning what's the amount they expect to receive at their full retirement age. Let's say that the case told us that Mr. Example was expecting to receive $20,000 per year at his full retirement age, and that Mrs. Example was expecting to receive $24,000 per year at her full retirement age. We can fill in that information. On line 4, we select the age that the client and spouse want to retire in our scenario, and then we can click on the Calculate and Save button. The software will calculate for us the expected benefits in today's dollars on line 5. So as with the other fields we looked at on the long-term goals tabs, you see that line 5, the cells are in blue. That tells me that the software will calculate that for me, and we can then use this information on our long-term goals 1 or long-term goals 2 tab when calculating the retirement need, including Social Security. Notice also that we have the ability to create multiple scenarios. Let's say, for example, I wanted to show them an alternative scenario where they retired at age 63. I can click on the current record for age 62, duplicate that, open that record, change the name to age 63, change the retirement age to age 63, and hit my Calculate and Save tab, and I will then have 2 different scenarios to select from in order to illustrate some alternative choices for the client. The next tab we want to look at is the Tax Calculator tab. Here we can fill in our client's tax information for the prior year, or we can estimate for this year after recommendations, or both. I'm going to name this one 2020 Taxes Estimated, because I'm going to estimate their tax for 2020. My clients were married filing jointly. Next, I fill in their combined gross income of $85,000. I also recommended that they save $10,000 tax deferred in a 401k. So I enter that on line 2. Now I can scroll down to the Calculate and Save button, and as usual, the fields in blue will be filled in for me. and we can see their adjusted gross income calculated at $75,000. Since Roth IRA contributions are not tax deductible, those contributions are not included here. If we look at the itemized deductions listed on lines 10A through 10G, you'll notice that you can fill in the various types of itemized deductions for the clients. My example clients only had mortgage interest as an itemized deduction, and it's less than the standard deduction. So I'm not going to use those lines in this calculation, but in a case where clients do have itemized deductions, you would simply fill in the appropriate amounts there. To determine deductible mortgage interest for the year, you can use your financial calculator, or you can use the amortization schedule provided on the Expenses and Liabilities tab. Let's take a look at this. On the Expenses and Liabilities tab, I just need to go to the entry for the mortgage. Open that, and down in the bottom left corner, you'll see a button for amortization. Here you'll find an amortization table showing you the interest paid for each monthly payment. When I go back to my tax calculator, I then need to open the record I was working in and continue filling in the rest of the information, starting on line 11. Remember, my clients are taking the standard deduction because their itemized deductions are lower. The blue button with the I for information can be used to help you find the standard deduction for the current year. If I click on that button, I can find the married filing joint standard deduction of $24,800 for 2020. I fill that information in line 11. Go down and click the Calculate and Save button. And you see that the software has done some additional calculations for me, including taxable income on line 15. Of course, we know that the taxable income is then used to calculate the tax based on the tax rate tables. We have two ways we can choose to estimate the tax. One way is to use line 16, the blended tax rate. So for example, you might come up with a blended tax rate of 10%. Go down and click your Calculate and Save button, and you can see on line 17 your estimated tax is based on 10% of line 15, your taxable income. But what if I wanted to be more accurate than that? I can override that on line 17A, where I actually use the tax tables to calculate the tax. Again, we have the blue circle with the I we can click on for additional information, and you will see the 2020 tax rates here. We can use their taxable income of $50,200 to calculate their tax, which I've calculated to be $5,629. So I'm going to close the pop-up box, and in line 17A, put in my more accurate tax calculation of $5,629, and then go click the Calculate and Save button again. Now what we can see is that the software will assume that I've chosen to override line 17. If I wanted to use the estimated amount on line 17, I would need to change 17A to 0. Anytime there's a value other than 0 on line 17A, the calculator assumes that that's the value you want to use. So now we have calculated their tax, but we're not done yet. They still have 2 children under age 17 who qualify for the child tax credit of $2,000 each. So I'm going to go to line 21A for the child tax credit and fill in their $4,000 child tax credit amount. And then I need to calculate and save again. Now we can see the bottom line is that they end up with a tax liability of $1,629. If we wanted to run another calculation to test out some different tax scenarios, we can do that by giving each one a new name. Again, I could go down to the bottom, click on the 2020 tax estimated, duplicate that, then give it a new name, and click Calculate and Save with the new estimations under the new name. Then I would have both records to look at for future scenarios. Now that we've calculated the tax at $1,629, I'm going to go back to the Expenses and Liabilities tab for a moment. You can see here that the original case information had them with $12,750 of withholding. You can also see that in the recommendations video, we arbitrarily changed that to $1,000. Normally, you would run the tax calculator first rather than just arbitrarily choosing a number, but we hadn't learned how to use the tax calculator yet at that point. So I'm going to go back now and fix that recommendation by clicking the recommendation that I no longer want, deleting it, and making a new recommendation for the $1,700 of withholding. And as usual, I need to make sure that I use the Save Recommendation button when I save that recommendation so that we are preserving the original amount withheld of $12,750 and can clearly identify the recommendation that we've made. I can then go to my Reports tab and look at the current year income statement with recommendations. And we can see that the recommendation has now been changed to $1,700, a more accurate recommendation. We have two additional tabs to review on the top navigation bar, the Estate Calculator tab and the Goals Report tab. The Estate Calculator tab won't be used very often since the federal estate tax exemption is over $11 million. But when you have clients who may end up with very large estates, the calculator will help you work through the federal estate tax calculation. The example clients are not in need of this calculation, so I can skip this tab, but if you need to use it, it's very similar to the tax calculator. White fields are for you to fill in information, and blue fields calculate when you click on the Calculate and Save button located at the bottom of the page. Finally, we have the Goals Report tab. This is where I can summarize where the client is after I've completed the analysis and made appropriate recommendations. First, you need to name the report. Mine's pretty simple, so I'm just going to call it Example Goals, since these are the example clients. If you wanted to run multiple scenarios, you might have multiple goal reports, and you might need to name them more specifically, such as Example Goals, age 62 with 90% wage replacement ratio, and then another one, Example Goals, age 63 with 100% replacement ratio. I can then go through the list of goals and mark each one as to whether it's relevant to the client and the status as accomplished, on track, or delayed. So for example, on line 1 for adequate insurance program, we would say yes, that's relevant to the client. And after our recommendations, the status is accomplished. There's also space on the right to add notes. We might note, for example, that we updated the HO insurance and added a personal liability umbrella policy. After we filled in each of the lines appropriately, we go to the bottom and we click Save. Now I can go back to that information later, or I can click on View Report, which gives me a nice summary that I may choose to print out and present to the clients when I meet with them. When presenting to clients, you'll typically begin with a review of where they were and their stated goals, and then you review your recommendations and how those recommendations are expected to impact their financial situation and accomplishment of goals in the future. This concludes our final video on the use of the Money Education Financial Statement Preparation and Analysis software. We hope that you found these instructional videos to be helpful, and we wish you success in completion of your financial plan development course and in your future career in financial planning.